Today's Targets in Focus is with Rand Merchant Bank in South Africa, whose currency strategists specialise in the African currencies, as well as forecasting the likely moves for the majors. I'm joined on the line from Johannesburg once again by John Cairns, currency strategist for RMB. Thank you very much for talking again to Dukescopy TV, John. Let's start with the euro-dollar. Last month you forecast it to be at around 134.2 now, and it's not far off that today. What do you expect the main developments to be now, and where do you see this pair heading in 1, 3 and 12 months?
Well, the outlook on euro-dollar, it's still a fight to see which is the worst currency. Both of the major economic zones in the world have significant problems. While the US economy is actually doing a lot better, it's even looking like we're going to see 3 or 4% GDP growth in the fourth quarter. We've got likely fiscal tightening next year, so the outlook on the economy is not that great. And of course, you've still got the effects of quantitative easing, so all the monetary easing, which is of course negative for the currency. So the dollar's weak against most currencies, but then so is the euro. The euro is weak against most currencies as well. Pretty obvious why that's the case with all the sovereign debt issuance going on in Europe. So sovereign debt problems going on in Europe. Our view at Rand Merchant Bank remains the same, but of the two, it is Europe that has the bigger problems. Euro-dollar, can certainly fall a lot further. We're looking at for it to fall maybe to 128 by the middle of next year, which is not that an aggressive move from where we are now, but I think it's the trend really that we've got in place, which is for further euro weakness against everything, but even against a dollar which is itself quite weak.
On to the dollar-yen now then. Do you expect further intervention from the Japanese going forward, and where do you see this pair heading?
Yeah, further intervention from the Japanese authorities is certainly possible if dollar-yen starts heading lower again. The intervention that they did do, huge in size, over $100 billion, and it was $125 billion, very successful in pushing the pair up. Went not quite to 80 from a lower below 76, but we went to 79, and we've settled at just under 78. So they've achieved two big figure moves, and the market will fear further intervention if dollar yen heads lower again. I think that's almost a certainty. It's the pair's outlook is still got a lot to do with risk aversion. As we discussed, both the euro and the dollar are weak, so players are still looking for safe haven. The yen is one of your best bets, given that the two other major economic zones are so significantly weak.
On to the dollar CAD now. Do you expect local factors or the oil price to start to take more of a precedent in this pair, or will it still be risk sentiment? And where do you see it going in the short, mid and long term?
No, the CAD, like most of the commodity currencies, is being in fact almost all markets, is being driven by risk appetite. The CAD, like some of the other commodity currencies, such as Brazilian real, the Aussie dollar, has done well over the past few years, which is reflecting of this much better commodity price environment. We still suspect that once risk appetite, or if and when risk appetite improves once again, so hopefully through the middle part of next year, the CAD can go down maybe even 97 on dollar CAD. But again, that currency, it's overvalued. How long it can sustain down at those levels is questionable. So our forecast here at Rand Merchant Bank is, while we do have CAD strength again next year, for our longer term forecast, it is for CAD to come off quite meaningfully in the medium and longer term.
Finally then, on to the Rand and South Africa. South African growth was reported at 1.4% in Q3, which was less than predicted, I believe. Was that already factored into the Rand? And where do you see it and South Africa going forward?
Well, South Africa's economy, so far at least, has actually held up very well in this global downturn. If you look at the PMI data, there's only 5 countries in the world that are reporting PMI figures, the Purchasing Managers Indices figures, above the 50 mark. The US, India, and South Africa being 3 of the 5. So South Africa is actually doing surprisingly well. Not really sure though that that's having much impact on the currency. It's really driven by risk appetite, funding problems, given the dollar squeeze that's going on in Europe at the moment. Our view at Rand Merchant Bank is that The rand can certainly has the scope to go a lot weaker in the short term if these European problems aren't resolved. But we have a strong conviction call that rand gains will resume at some stage next year. The dollar rand could go right back. Our year-end forecast is 7.20, but could even see 7 on dollar rand again next year once this period of risk aversion settles back.
Thanks very much for your time, John. Stay tuned to Dukes Copy TV for more interviews and targets in focus this week. Goodbye.